What if there was a time when the world's most advanced financial system wasn't in Europe, but in the Islamic world? A time when cities like Baghdad, Cairo, and Cordoba were not just centers of culture, but the beating heart of global finance. Between the 8th and 14th centuries, the Islamic world didn't just participate in global trade, it led it. At a time when Europe was still economically fragmented, Islamic empires had already built a connected commercial network stretching from Spain to India. But this wasn't just about trade routes, it was about systems. One of the most important innovations was the use of financial instruments that made long-distance trade possible. Merchants didn't always carry gold or silver across dangerous routes. Instead, they used written financial agreements similar to early checks and bills of exchange. A trader in Baghdad could issue a payment order, and a partner in another city could honor it. This reduced risk, increased speed, and allowed trade to expand across continents. Trust became currency, and that trust was supported by a legal and ethical framework rooted in Islamic law. Contracts were taken seriously, business agreements were documented, and principles like fairness and transparency were not just ideals, they were expected. Another key feature was the prohibition of interest, known as riba. Instead of lending for guaranteed returns, Islamic finance encouraged profit sharing. Investors and entrepreneurs would share both risk and reward. This created a partnership rather than pure debt. It also meant that capital flowed into real economic activity, like trade and production, instead of just financial speculation. Markets were also carefully monitored. Officials ensured fair pricing, honest measurements, and ethical behavior in trade. This helped maintain confidence in the system, and confidence is the foundation of any financial network. But the real strength of this system was its scale. Muslim merchants connected East and West. They traded silk, spices, gold, textiles, and knowledge. Wherever they went, they carried financial practices. Over time, many of these ideas influenced the development of financial systems in Europe. Concepts like contracts and credit finance slowly spread westward. But this dominance didn't last forever. As new powers rose in Europe and global trade routes shifted, the center of financial power began to move. The Islamic world gradually lost its leading position, but its legacy remained. Because many of the financial tools we use today have roots in systems developed centuries ago. Systems built on trust, contracts, and shared risk. When we think about modern finance, it's easy to look at today's global powers, but history tells a different story. There was a time when the world's financial system didn't revolve around the West. It was led by a network of merchants, scholars, and institutions that transformed trade into a global system, and in doing so, they helped shape the foundations of finance as we know it today.